Welcome back. You're watching Trading Hour. Now we'll shift focus to the primary markets where it's been a record IPO year. About 102 issuances so far, raising about 1.75 lakh crores, surpassing the highs of the previous few years. We have Pranav Haldea, MD of Prime Database, joining us now to decode some of that primary market action. Pranav, welcome to the show. Thanks for your time here. Just looking at some of the data you provided us from Prime Database, in 2025, the OFS has crossed about 1.1 lakh crores versus the fresh issuance of 64,000 odd crores. Should investors be worried that, the promoters and these PE funds are selling more than companies are investing? And is there any clear correlation you see in your data, between these lower OFS heavy IPOs and better post-listing stock performances?
Good morning and thank you for having me. Yes, it's been a record year, and before I get into the OFS bit, I would like to say that this is actually the first time in India's IPO history that you've had two back-to-back all-time high years. Traditionally, you've always seen that all-time high year is succeeded by a couple of years of relative calm, but you've had record fundraising in 2024 and now again in 2025. Now, coming to your question about OFS, of course, that's something which has, structurally changed in the Indian IPO market over the last 30, 40 years. Just looking at the data, if I look at the data of 24-year period from 1989 till 2012, during that time, just 13% of the amount was actually raised through off of sale. While over the last 13 years, since 2013, 68% has been raised as offer for sale. So it's been a big change. A couple of points which I'd like to make. One is that, fresh capital being raised is not particularly or necessarily a good thing. This period which I spoke of from 1989 till 2012, where a lot of fresh capital was raised, most of those companies either shut shop as their business models did not work or vanished. So what you used to see back in the day was, companies used to come to the IPO market much earlier in their life cycle to raise the risk capital or the growth capital. What has structurally changed in the Indian capital market over the last 10, 15 years is that risk capital is now being provided by angel investors, venture capital, private equity, and only companies which are able to reach a certain scale, a certain size, establish some governance mechanisms, come to the IPO market. So in my view, this is a sign of a maturing capital market ecosystem. This is also very akin to what you see in the Western markets, where typically by the time the company comes out with an IPO, the founder is left with single digit of holding. We should also acknowledge that these VC investors do need to get an exit, because only if they are able to return money to their investors will they be able to raise the next set of funds to invest in the next set of growing companies in India.
No, we take that point entirely, Pranav. It makes entire sense to not look at IPOs, whether they're good or bad, whether it's a fresh issue or it's an offer for sale. That point well taken. The question here is that if it's an offer for sale, typically it's about the value that is left on the table. If a company comes much earlier in its growth journey, the riskier capital, there is a lot of growth ahead of them, and as a result of which higher valuations the street would have liked because they were novel businesses. But now the VCs and PEs are investing in these companies at extremely high valuations, juicing most the value out, and thereafter, in a way, so to say, dumping that paper on public at a much higher valuation for their returns, when growth or most of growth is perhaps behind the company. So it's the quality factor as against, whether the paper comes from the promoter, the PE investor, or whether it goes back into the company for growth. So that's something that is, a bigger function of how returns are. So I wanted to ask you on that itself, on the database that you have, how many of these issues that have come by have done well on listing day, 6 months from listing day, and 1 year from listing day? Do you have any data on that?
Yes. So, to answer your first part, market is all about risk and reward. So surely we can have, companies coming at an earlier stage to the public market, but then we should remember that, that would, result basically be more risky investments as well as far as retail investors are concerned. And that's what you saw in the past as well. Now, coming to the data, I'm not a big proponent of doing this post-analysis, whether 6 months or 1 month later or 1 year later or 2 years later, because I do believe that after a company gets listed, its share price will go up and down on the basis of its own performance, how the sector is doing, how the economy is doing. Nevertheless, we did do some analysis, and we looked at some data from 2015 onward, which is the last 11 odd years. And actually, it was startling. The findings were extremely surprising that out of the 103 pure OFS IPOs which have come, they delivered an average of 351% return, while the 81 pure fresh capital IPOs
Sure.
delivered half, or 173%. So actually, even from a return point of view, and in fact, I often give this example of India's largest IPO, which happened last year, of Hyundai, which was a complete
Got that,
OFS
Pranav.
and has given a good double-digit return. Yes.
Well, Pranav, sorry to cut you short. We have a lot more questions, but we have some breaking news coming in, so we'll have to thank you for now.